Hey, what's up guys? John here. Rents nationwide are now in the negatives. This is the first time we've seen this since 2020. Since everything that happened in March 2020, now we're starting to see rents really start to plummet. And I think this is really just the beginning. In fact, I think many landlords are in very big trouble. I think we're going to see a huge opportunity for new real estate investors to jump back in the market. If you're a renter, maybe you want to buy your first deal. I think you're going to see some incredible opportunities coming very, very soon because landlords are too leveraged. Cost of money is too expensive with interest rates. Property tax and insurance, it's getting way too expensive. And many landlords are just simply not in a position to where they can lose money on rents and come out of pocket on all the other costs. Look at what's going on here. It's pretty shocking. In fact, in 2021, 2022, on this channel, I've been calling that rents are going to start to fall. And look at the timing on this. For example, this property I sold, if you look at the date here, this is July 21st, 2021. If you look right here, it was basically at the height of the rental market, And I sold this property. You read the numbers there, right? And look at what they're saying it's worth now, right? So it's already dropped. They say 60K, but cost of sale, maybe you're looking at another 80K. So they might be underwater. Do the math, 140, 150 grand minimum. Look at what I bought the property for. So why I'm showing this is not to like brag or anything like that, but it's simply just, if you look at the fundamentals, you'll see what's going on in the real estate market. You're going to see what I'm going to show you next is going to be right on the money. And I think that if you follow what I'm saying, you're likely going to do really well financially. I mean, I picked this property up right here. Right? I picked it up right there. So, 5-6 years ago. Here's what's happening. Here's what's going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the real estate market, the housing market, so you can make smart, well-informed decisions based on facts and not on emotion. And also, if you want to invest in real estate, or if you want to, get lines of credit, and you want to position yourself for the greatest wealth transfer of all time, you're going to need good credit to do it. So we'd love to help you. We'd love to help fix your credit at greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session at greatcreditfast.com. Take a look at this. So in May 2023, the median rent in the West was 3% lower than a year ago, right? The biggest year-on-year drop are in Vegas, 6%, Riverside, San Bernardino, 5.9%, and Phoenix, 5.7%. While in Austin, they're saying Austin's rent prices have fallen the most, going down by 20.76% in a year. Now, I know many people are going to say, John, not in my market. Rents are still really hot. Well, of course. I mean, rents have jumped 40% probably, depending on your market, over the last 3 years collectively. So you've probably seen massive jumps in rent. But what you're going to start to see is landlords simply desperate. And you're going to start seeing more and more rental deductions in the coming quarter. That's what I think is going to happen. I think we're going to see these landlords walk into massive problems. I mean, look at this. So why rental vacancies continue to rise, right? So you just look at the data here. So 2010, the Great Financial Crisis, there was nobody's building anything, right? Almost nobody. Now they're saying it's 1.7 million, right? 1.68 million. But look at this. Nearly 1.1 million apartments are currently under construction. They're just apartments. So before, that was, this is just privately owned housing units, right? Privately owned housing units. 1.1 million apartments are currently under construction, according to the commercial real estate tracker CoStar, right? A pace not seen since the 1970s. Big number, huge. More than 40% of all U.S. mortgages originated 2020 to 2021. So here's my prediction. Here's how I see this whole thing playing out. Now, you have 40% of all mortgages taken out 2020, 2021. You have a lot of people locked in incredible rates. And a lot of people believe that because of this, we're not going to see a housing crash because people, they have a really low cost basis on their property. Now, I understand that. I can agree to some extent. People that have really low rates, definitely, if they have cash and they have the income and they're able to offset inflation because their income's rising, sure, these people are going to be better, just better positioned. But most people aren't going to be able to offset inflation and come out of pocket if inflation continues to run rampant over the next few years, which seems like it's going to. So I think a lot of people are going to be really pushed into a financial hardship or pushed into a corner. So what do people do when they're pushed into a corner? They do a couple things. They sell off assets. They try to bring in income, right? So how would they do that with a single-family home? They'd probably rent it out, right? So you start to think about this. You have 40% of all mortgages that were taken out during that peak period. Record high home prices, record low mortgage rates. A lot of people are going to start listing their homes for rent. It's going to be the accidental landlord situation. Now, I called that, and then 3 days later, Yahoo News came out. They did a whole thing saying, accidental landlord. I'm telling you, you're going to start seeing rents absolutely crash. And so when you look at this, look at the real estate landscape. The last few years, what did all investors say? They said that the number one problem is inflation, and you need to buy hard real assets, and those assets are going to be worth a hell of a lot more than fiat currency. And I fully agree. But you need to be able to hold on to these assets during the hard times. Meaning, if you got to drop rents, you got to drop rents. If you have to, absorb some new costs, whether it be green energy upgrades, whether it be rising property taxes, whether it be increased insurance costs, repairs, whatever it may be, you have to be in a position to where you can pivot and navigate during the hard times. That is where I think a lot of people are going to fall short, because they're buying these properties at a 5% return. Many markets, 5% return. So you think about it. If your rents are dropping 10, 15%, and you're operating these buildings at a 5% return, that means you're already operating in the negatives, not including the fact that insurance, property taxes, utilities, all of these costs have continued to rise. And mortgage rates went from 3% to 7.5%. So a lot of these property owners are going to have to refinance their loans, because 5 units and above is considered commercial, meaning you can't get 30-year fixed loans like you can on a house. So every 3 to 5 to 7 years, usually, they have to go back to the bank and apply for a new loan. And so that's going to be a really, really big problem if they don't have equity in their properties and they don't have the cash flow to support that type of debt. The bank isn't going to give them the loan. It's going to be a big problem. I mean, you're looking at $1 trillion worth of those issues in just the next 12 months, and $2.5 trillion worth of those issues from now until 2027. So, I mean, you're looking at 3.5 years from now, it's just going to be a tsunami of situations. So foreclosures are rising. Here's what experts say for the housing market. What do people do when they have a property that they can't afford? They're either going to turn it back to the bank or they're going to rent it out. Turn it back to the bank, rent it out. Eviction filings up 50% higher than they were pre-pandemic in some cities as rents rise. Now, look at this. This is really fascinating. So in 2010, 2010 great financial crisis, you could kind of see where rents were growing. Sure, rents grew. A lot of people said, John, in 2008, 2009, rents actually grew. And in some markets, sure. But if you look at where they were, around 2008, 2009, and maybe it was around $875 for one bedroom. And then past 2010, it was $934. So, I mean, it's almost like a nominal increase. Very, it's almost like a nothing burger, right? But if you look at where rents are now nationally, over $2,000. $2,000. So how are rents going to be supported at $2,000 when we have tenants and every American in financial hardship? Well, they're not. So what are they going to do? They're going to start defaulting. They're going to start feeding themselves before they feed the landlord. Landlords are going to start realizing that. And landlords are going to say, hey, look, I'm looking for the creme de la creme tenant. Pay me first month, last month up front. I'll give you, rent at X price. Or I'll drop your rent, or better yet, I'll just give you 2 or 3 months rent free on the back end of the lease, but you have to sign up front and you have to give me a couple months of upfront payment. Now, this is what's going to happen. We're going to start seeing landlords becoming desperate to fill units, because you think about it, these landlords are not just competing with other apartment buildings. They're going to be competing with homeowners that have 3% mortgages. They're going to be competing with people trying to rent out rooms in their houses. They're going to be competing with all these different people, second homes, Airbnb investors, all these people that are not that active yet in the housing market. They're going to start becoming competitors for a lot of these traditional commercial multifamily landlords. So these landlords are getting hit from every which direction, not just home inventory increasing, not just the accidental landlords, not just it's all of these different things happening at the same exact time. And as that's happening, mortgage rates are continuing to rise. And Jerome Powell says that they're likely going to continue to keep them higher for longer. So you just start to look at the math. You start to look at it. It doesn't make any sense. There's no way in which most landlords are going to be able to continue to keep rents where they are now and continue to raise them 5-8% a year to offset their newfound costs. It's going to be a problem, but it's going to be a huge opportunity for the smart and savvy real estate investor who's renting right now, who's looking and saying, you know what, I could buy a duplex. I could buy a fourplex, 3.5% down, 5% down. I could buy one of these deals. I could move in. The adjacent 2 or 3 tenants can, pay the rent, and I can make things work. And if I have to do some of these clean energy upgrades, if I have to, absorb some newfound cost, hey, all that matters is the cost basis, like getting into the deal at the right price, having flexibility, being able to move and pivot. If you get in the deal at the right price, as the old saying is true, the money's made on the buy. And I think we're going to start seeing a lot of sellers and a lot of property owners that are desperate to get up underneath of it. And so if you are a tenant, if you are, maybe you own one house, you're somebody that wants to go out there and invest in multifamily, 2024, 2023, late 23, probably 2024, 2025, you're going to start seeing tons and tons and tons of opportunity. What do you think? Drop below, hit the like button, add me on IG. But this is, I'm telling you, this is what I think is going to happen. I think we're going to start to see some huge opportunity in the real estate market, massive opportunity. I've actually been waiting for it the last year and a half, saying I only bought one deal, waiting for it, saying, you know what, I think we're going to start seeing a lot more opportunities coming in the very, very near future. Looks like it's coming faster than we all realize. Big storm right ahead. I mean, the CEO of Starwood Capital, the largest multifamily landlord, single-family landlord in America, 180,000 houses, he came out saying that a level 5 tornado is ahead. What do you think? Do you agree with him? I think he's probably a lot smarter than most people in the real estate market. I think he sees a lot of things and he has access to data and information that I think a lot of people wish they had access to. If that's what he's saying, I think it's worth paying attention to it. A lot of other investors are saying the same thing. A lot of people are getting very, very skittish and concerned, I think for good reason. Drop your comments below, add me on IG, and if you want to fix your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session. I'll catch you guys in the next video.